If you're a homeowner here in Colorado, you already know your property value has probably gone through the roof. But what if all that wealth on paper isn't really translating to cash you can use? Today, we're going to break down a really powerful strategy for 2026 that's all about turning your home equity from just a number on a page into a dynamic financial tool. All right, let's get right into it. This one gets right to the heart of it, doesn't it? Does this feel familiar? Your property's value has soared. You're officially house rich. But then you look at your monthly budget, you see the rising costs of, well, everything, and you feel surprisingly cash poor. If that sounds about right, you are definitely not alone. This paradox is exactly what we're going to unpack today, and more importantly, we're going to talk through a strategic solution for it. So, here's our game plan. First, we're going to dig into the hidden economic forces that are creating this exact situation. Then, we're going to shift our mindset a little to see your equity not just as a safety net, but as a real strategic asset. We'll explore why a tool called a HELOC is the key to unlocking all that potential in 2026, and then we'll walk you through a surprisingly simple way to see how it could work for you. Okay, so let's tackle this head on. Why are so many people in Colorado feeling house rich but cash poor? Well, the answer starts with a story of some pretty incredible growth. A story that's reshaped the entire financial landscape of our state and created both massive opportunity and, you guessed it, some hidden pressures. Okay, look at this. This right here tells a massive story. For the last decade and a half, federal data shows Colorado has been one of the top spots in the entire country for home price growth. Now, this isn't just a little bump. It's a sustained surge that has created this huge well of equity for homeowners just like you. This is the house-rich part of the equation, and it's the foundation of the whole strategy we're about to explore. Right, but that on-paper wealth, it doesn't pay the bills, does it? The economic reality of day-to-day life tells a very different story. It's a story of pressure, rising costs, and a whole lot of uncertainty that makes that equity feel completely locked away and out of reach. So let's look at the challenges creating the cash-poor side of this paradox. The first major headwind is something economists are calling a K-shaped economy. Basically, what's happening is the wealthiest households are doing great, their assets are growing, and they're driving a ton of consumer spending. But for a lot of other folks, real wages just aren't keeping up with that persistent inflation, and that's creating a serious squeeze. So you have one arm of the K pointing up, while the other arm is bending down under all that financial pressure. And this is where you're probably feeling the pinch directly. I mean, it's not just about what you're paying at the grocery store. The actual costs of owning your home are climbing fast. Colorado is now the 5th most expensive state for homeowners insurance, with average premiums jumping a whopping 16% in just 1 year. You add in those ever-increasing HOA dues, and that monthly budget just gets tighter and tighter. And if you're looking ahead for some good news, well, the forecast is a little cloudy. Projections for 2026 show job growth slowing way down, while inflation is expected to stay stubbornly high. And at the same time, the housing market itself is changing. As more homes come on the market, we're shifting toward a buyer's market, which could even lead to prices softening a bit. All of this creates a sense of uncertainty that makes you want to just sit tight. And honestly, this quote from the Colorado Association of Realtors just hits the nail on the head. It frustrated everyone. It speaks to sellers, buyers, and just that general feeling of a market that was kind of stuck. This unpredictability is exactly why a new, more flexible strategy is so necessary for 2026. Okay, so we've laid out the problem, this paradox of high equity and high costs. Enough about the problem, right? Let's pivot to the solution. And this requires a big shift in how we think about our home equity. We need to move it from being a passive number on a statement to an active strategic tool in our financial toolkit. This is where we need to make that mental shift. You know, the old way of thinking is reactive. You see your equity as an emergency fund you only touch when you're in trouble. But the new approach, the proactive wealth strategy, sees your equity as a powerful, flexible financial resource. It's a tool you can use to make smart investments, to fund home improvements that actually add value, or to jump on other opportunities that move you forward financially. The key that unlocks this whole strategy is the HELOC, which stands for Home Equity Line of Credit. So let's break down exactly what this is in simple terms. Think of it like a flexible line of credit, kind of like a credit card, but it's secured by your home's equity. You get approved for a certain amount, but you only draw and only pay interest on the money you actually use. And here's the critical part. It doesn't touch your main mortgage at all. So we have this powerful tool, the HELOC.
But why is it the perfect fit for the unique economic conditions we're seeing in Colorado for 2026? Well, the answer is all about its ability to protect what you've already built while opening up brand new opportunities.
Think about that amazing mortgage rate you have right now. 2, 3, maybe 4%? This quote from economist Matthew Gardner absolutely nails it. Millions of us locked in those historically low rates. Giving that up by doing a traditional cash-out refinance would be a huge financial mistake. A HELOC, on the other hand, lets you tap into your equity while preserving that incredible rate on your main loan. That is the single biggest advantage in today's environment.
All right, so let's recap the strategic case here, point by point. First, and this is the big one, you preserve that low mortgage rate. That's non-negotiable. Second is flexibility. Unlike a regular loan where you get a lump sum, here you control when and how much you borrow. Third is timing. After a crazy period of rising rates, we're finally entering a more stable environment, which makes the variable rates on HELOCs more predictable. And finally, this is all about strategic use, having capital ready to diversify investments or put it back into your home to boost its long-term value.
Okay, the strategy makes sense, but I know what you're thinking. Dealing with a bank, piles of paperwork, the slow process. It can be a huge roadblock. Well, thankfully, the path to exploring this has been totally redesigned to be simple, fast, and digital. And this is where things have gotten so much better for you, the homeowner. Research from the Federal Reserve shows that modern, tech-driven lenders can process mortgages up to 20% faster than the old-school banks. Now, this isn't just a small improvement. It's a fundamental change that makes the whole process faster, easier, and way more transparent for you.
So what does this actually look like for you? It starts with a super simple 60-second equity survey. It's designed to be quick and painless. You just click a secure link, answer a few basic questions about your property, and submit the info. That's it. There are no complicated financial forms to dig up, no crazy long applications, and no initial hard pull on your credit. You can find that equity survey link right down in the description or in the pinned comment, so you can get started whenever you're ready. Okay, so you've taken 60 seconds to fill out the survey. What happens next? This is where the magic really starts. This is where we go from just raw data to a clear, actionable picture for you and your family. It's where we move from general information to your personalized strategy. The second you hit submit, our team is on it. We get to work on your analysis right away. What that means is, when we finally connect, we're not starting from scratch. We come to the table already prepared with the data and insights you need to make a really informed decision about your own specific situation. So what are we actually doing for you behind the scenes before we even talk? Well, we calculate your home's current estimated value to see exactly how much equity you have available. Then, we analyze your property's specific position within the 2026 Colorado market trends we talked about. Based on that, we can start to identify potential strategic opportunities, and we pull all of this into a personalized data snapshot that becomes the foundation for your one-on-one strategy call.
After you complete that quick survey, you'll see a link pop up to book a one-on-one strategy session at a time that works for you. This isn't a sales call. It's a chance to review your personalized plan with an expert, ask all your questions, and really figure out if this strategy is the right fit for your financial goals.
So let me leave you with this question. Right now, the wealth sitting in your home is your most powerful, and yet it's probably your most underutilized financial asset. In the complex economic environment of 2026, the question isn't really if you should use it, but how. You can strategically use it to secure your financial future. Are you ready to unlock its full potential? Exploring that answer is just a few clicks away. Thanks for tuning in.